20 points higher. I mean, I should say only 20 points higher because it was 200 earlier. 25,690 is where we are at. We are, of course, getting into the last 40 minutes of trade. Vaibhav Sanghavi is CEO, Ask Hedge Solutions. Vaibhav, good to have you with us here. Thanks for joining in. I was asking about these power equipment companies. Actually, Hitachi's down sharply, but look at GE Vernova, another 6% lower. CG is lost, I think, from 800, 900 levels, stocks down to 550. Very sharp falls across the board. Gurmeet was with us, and he was saying that maybe one reason is the budget's expected to focus more on boosting consumption away from capital goods, etc. But I think there is this Chinese equipment players being allowed for government tenders, etc., which is also a factor. Any thoughts on at what price do some of these become a little more attractive? CG especially, right? I mean, CG is building out other businesses. I mean, this is just one business, the transformer business. They got a railway business. They're, of course, doing the OSAT business, which is a new one, but one of the few companies which has got central government subsidy. What's your sense, Vaibhav?
I think, first of all, thank you for having me. But, from a sectoral standpoint, which you rightly pointed out, I think, from our perspective, the trigger point has been, from the market buzz about the Chinese equipment makers being allowed to kind of participate here. So that has kind of spooked off, especially on the industry perspective. Not that the order books are, not good, or probably the profitability matrix is not good. I think everything of that is in pretty much good order. In our view, which is slightly different from the street of what it is kind of showing, our view is basically data center is going to be an extremely big opportunity, and anything to do with the data center, including the equipment or probably power companies and the grid to kind of supply that. I think it's going to have incremental kind of capex coming about. So it's not only about the government putting in that money, but all the private companies who are going to spend a lot in this whole segment as well. So we do like this space. Unfortunately, in the last fortnight, I think it's kind of got marred by the whole buzz about these Chinese equipments. But that buzz has to be clearly seen with the context that there were supply shortage of certain equipments, from a grid perspective, and that is what that is what catered from Chinese side as well.
Right, Vaibhav, at the start of this year, we spoke to a bunch of market makers, intellectuals, and all those who manage a lot of money. We asked them for their nifty expectation in terms of returns for 2026. A large part of them said between 10 to 20%. You were in the camp that you believe that the market over the next 3 years can actually give you more than 50%. What drives this optimism, and what sectors would drive this growth?
See, I think the way to look at it is basically that from an overall perspective, last 1.5 to 2 years, we have compressed in terms of the P. Second, from an FPI ownership in India, we are almost a 15-year low. Thirdly, it is also largely driven by the overall AI shift towards China, Korea, and Taiwan. Our view is basically that in the last 1.5 hours, where we've seen the earnings pretty subdued, in fact, earnings downgrades kind of happening. I think that kind of stabilizes, and we look up from here onwards in terms of the earnings. Lastly, the GDP growth, which again we'd seen some very dull period in the last year. I think it's been on the recovery trend, at least for the last 2 to 3 quarters. To be very honest, the earnings kind of lag the GDP growth. And I would continue to wish for more nominal growth coming into the play. But as things stand, our view is that we are at a cheaper valuation, the earnings growth stabilizing. For the next 2 years, we are looking at about 14 to 15% earnings growth. So in all likelihood, I think we should be following the earnings growth trajectory, which is nothing new, but just the historical perspective where markets continue to follow the earnings growth. And in our view, it is more of an earnings growth story with slight amount of PE re-rating, which makes me optimistic for the next 3 years.
Vaibhav, forget about the upside. What about the downside from here? In the last few days, this call of, barking up the wrong tree, we're getting too optimistic. FI holding last year, 14-year low. This year, it's a 15-year low. That's the kind of selling that we have seen. Earnings growth pick up, yes, that is the hope. Nominal GDP, yes, hopefully it goes to double digits. All that is known. But that call for maybe seeing a swifter correction, the broader market staying in pain, and maybe headline index corrects as well. What are the odds? Sometimes when these voices get a little louder, it's not such a bad thing. And from there, sometimes the market does reverse. So if you put out downside on the index itself, what do you think? How low can we go from here?
See, I think, Nigel, to look in, from your perspective, I think you're right in terms of saying that the FPI has been the pain point, from an Indian market standpoint. And it's not only about last 6 months or probably since the Trump kind of announced the tariffs. It is actually, if you look at it, it is happening right from 2022 onwards, wherein the Fed has started to increase the rates. Now, looking at a broader perspective, when the rates should have come or had come down, the logical conclusion would have been that emerging markets should have witnessed some inflow, which we didn't see. And the point is basically, because of that AI trade, we've seen that shift of flow, probably from India or not allocating towards India and going to China, Taiwan, and Korea. And that also got coupled with your earnings dullness, growth dullness, and which is why, or cumulatively, we didn't see any action from the APIs. Having said that, whether this can continue for a few more months, of course it can continue. We do not know the timing of it. But all in all, we can see that the variables surrounding it are actually getting in place one by one till the time that somebody would not be able to ignore a good growth story. So my guess is, and that's why we say 3 years and not probably 3 to 6 months.
So you think that we're closer to the end of the painful period? Would that be fair?
Yeah, provided if the earnings kind of not start deteriorating, honestly, okay. Because if earnings start deteriorating, then markets will follow that.
Hopefully, we get those mid-teens growth, at least that 12 to around 15%. Then the markets at least will be at least steady, if not move up. You were talking about value a couple of times during this conversation. 2026. What is that one sector that you're very, very bullish on? You mentioned data centers as well. You want to drill it down a little bit. That one theme that will actually play out.
So, Nigel, again, I think not only one theme, but few themes. One, of course, data centers and anything relating to data centers. Maybe it's cooling equipment, or maybe it is power and utilities. I think that's a segment to watch out for. In addition to that, I think banks on an overall basis, after mediocre growth in terms of the earnings, pressure in net interest margins, I think things are stabilizing with credit growth looking up as well. So, of course, that will also get influenced by the amount of FPI flow which comes into it. But that is something which, from a fundamental perspective, we are liking it. In addition to that, CDMO players are the guys we still are kind of very keen on. So overall, apart from the consumption, which we have been seeing for some time, these are the sectors looking good for 2026. Is
there anything that you don't like? Something that you believe has maybe either run its course or perhaps has no future triggers in terms of the growth expectations?
See, if I see from a sectoral perspective, pharma is coming under a slight amount of pain, and purely because of the generic players who has a sizable exposure to a drug which is Revlimid. So my sense is basically, I think you will see pressure on those numbers continuing through this year. Pharma has been a good sector, in the last 2 to 3 years. I think this is a time to get pulled off. In addition to that, I still don't understand the overall, rally from a base metal perspective in a light that, the global growth is not very encouraging. Now, we'll see where it kind of ends, but when it ends, I think that can be a little ugly as well. So I'm not preempting it. We'll wait for those kind of corrections to take place to see what we can take in terms of a view which is constructive on the negative side.
Look at the currency go, 90.84, and it is under pressure. And how?
That's what
once again. So it's just going one way, right? I mean, actually, if you keep the, if you put this chart and put
The
Nifty chart, it'll be exactly the opposite. I mean, this kept going higher, the dollar rupee across, and the Nifty, of course, sinking on the other side. So that is that. We'll maybe try and get a voice in on from the forex side in a little bit from now. Thank you very much for joining us, Vaibhav. Appreciate your time here. There you go. I think that's pretty much, it does the job, right? I mean, tells you what has happened today. Let's talk about